Good day once again, traders from all over the world. Welcome to this YouTube video. On this video, I'm going to show you again how to have an effective trade or how to enter the trades in the market, right? So we have this case of a disadvantage. Most of the time, when you enter a trade, the market goes in an opposite direction, right? I know traders, we are very familiar with this concept, right? Let's say now the market is going on a bearish movement, right? And then automatically at this level, you want to sell because you see an opportunity. And then automatically the market goes on an opposite direction, of which this is very painful, but most of the time this can take place. 80% of your trades, you will find out that most of the time when you enter, the market goes on an opposite direction. Okay, and each and every trader, we don't like going through this situation, but trust me, it can happen most of the time. Now, when it comes to the market and consistency, if you can have valid trades, if you can have valid entries most of the time, or 80% of your trades, if your entries are correct, simply means you're going to make more profit consistently. Right now, the problem mostly with our technical analysis traders is that most of the time when you enter the trade, you want the trade to go on your direction, right? Now, what I'm trying to say is this. Always we assume, if you sell, we always assume that the market is going to automatically go on our direction, right? Yes, 50% it can happen, 50% cannot happen, right? Sometimes what can happen is you can sell from this level and then the market just creates a pullback and then from there goes on to your direction, right? So there are two types of entries. The first entry is when you enter in this scenario, right? The first entry is this kind of a sell, okay? And then the second entry is this kind of a sell. Right. Now these two are not the same, okay? The difference is that this kind of a trade is entering after a breakout. Now, you wait for the market to break below your support level, then you enter from there. Okay? After the market breaks from your support level, then you enter. It simply means you are entering after a breakout. Now, this is a breakout entry, right? Now, this one is what we call a retracement or after a what? A pullback. Now, what happens is, once the market breaks below your support level, then you don't enter at that time. You automatically wait for the market to do what? To give you a pullback into the upside. And then from there, once the market goes into your direction, then you can sell from there after the pullback. Now, this entry is before the pullback, and then this entry is after the pullback. Now, what I was saying earlier is this. This can happen, right? After you sell, the market can create that retracement or pullback and then goes into your direction. So most of the time, in this case of our breakout strategy, we have two types of entries. It's either you're going to enter after the breakout or before the breakout. Okay? Now let's get to the strategy. Remember, we only trade this strategy on a New York session after fundamentals. Very clear and very simple. After fundamentals, not before fundamentals, because we are technical traders. Okay? Remember, this strategy always applies on a New York session and then after fundamentals. Okay, just make sure what time is fundamentals on your side, right? Now let's assume that you have your two levels, right? This will be your what? Your resistance, okay, and this will be your what? Your support level. Now here's the case, right? This is the market. This is your movement of the market, creating that structure. Now, the question is, right, how are you going to enter if you have your resistance level and your support level in place? Are you going to enter on a 15-minute? Are you going to enter on a 30-minute? Are you going to enter 1 hour, 4 hour, or daily, right? Or are you going to enter on a 5-minute or a 1 minute? That's the very valid question that all traders we always ask, right? But after a breakout, where am I going to enter? That's the question that we all have in place as traders. Okay, now let's see. We have a resistance, we have a support. Okay, remember, your support and your resistance level, we look for them on a 15-minute time frame to spot this thing, right? And then from there, the most accurate time frame for entry levels of the breakout is 1 hour time frame. Take this in mind, or take this in consideration. Remember, this is New York session, right? I know, let me make an example of our South African time, right? I know on USA, most of the time is around 10:30 there, right? If I'm not mistaken. The fundamentals mostly are around 10:30 in the morning, if I'm not mistaken, right? Now, in South Africa, around 3:30, most of the time we have news. 3:30, we have news. Now, for us to get a breakout, we wait for 1 hour candle to close from 3:30 to 4 o'clock. Then at 4 o'clock, this is where we look for what? For valid entries. From 4 o'clock going forward. If we don't get a breakout at 4 o'clock, simply means we are going to wait for 5 o'clock, we're going to wait for 6 o'clock, even at 7 o'clock, 8 o'clock, or 9 o'clock at night. Okay, so it doesn't matter what time we get a breakout, as long as it's 1 hour later from 3:30, of which the reason why we don't trade at 3:30 is because we avoid what we call fundamentals, because at 3:30 there's always fundamentals. It's a New York session opening. Okay, now we don't want to get mixed in fundamentals. Whether fundamentals are buying or selling, we don't want to get mixed. What we want is this 1 hour candle to close so that we can have our valid entries. I hope that made sense. Remember, we only trade after New York sessions fundamentals. Very nice, very nice. Now, let's assume that now the fundamentals are out. It's 4 o'clock. At 4 o'clock, what's happening? The market is right here. Okay, at 4 o'clock, this is what we do, right? Now, I want to show you something. There is this mistake that most traders make, right? Because of patience, we lack patience. Now, at 4 o'clock, the market is right here on 1 hour time frame, okay? Simply means the market hasn't broken below the support level, right? Now, what traders do, because they don't have patience, what they do is they switch to 15-minute time frame. Of which, when they get to 15-minute time frame, they found out that there is a candle that closed below the support level on 15-minute time frame. Now, on 15-minute time frame, if the candle broke below the support level, they automatically do what? Sell. Of which, let me tell you, this is wrong. 50% of the time, you will get it right. 50% of the time, you will get it wrong. Now, this is what we call a 50-50 chance. And remember, when you talk about the 50-50 chance, we talk about a probability. We are assuming. Okay? We are not direct in the market, but now we are assuming. In other words, we are predicting the direction of the market. And it's very dangerous for a trader to predict the direction of the market, because you don't know where the trader is going. You don't know where the market is going at that time. You are just predicting. You are not sure. Always take trades that you are sure of. Trade what you see, not what you predict. Don't hope that the market is going to buy. Don't hope the market is going to sell. Because the market doesn't go with emotions. The market doesn't go with your feelings. It doesn't care whether you are hoping the market to buy, whether you are hoping the market to sell. That is why it's very dangerous to put your emotions on the market. Okay? Don't predict. Predictions are emotions. Right. Now, the reason why we don't trade on a 15-minute time frame is because we are avoiding what we call a fake breakout. We are avoiding what we call a fake breakout. Remember, a small time frame, they move quite faster than higher time frames. There is always those certain pullbacks, breakouts, fake breakouts, pullbacks, so on and so forth. Now, what can happen here is that the market can break below on a 15-minute time frame, break, and then go inside the channel. And then automatically continue going inside the channel. And that time you are what? You are on a sell position. This is why most of us, we don't find valid entries. Now, automatically, when you do this, the market goes on an opposite direction. Now you are running on a what? On a loss. And remember, we are talking about Nasdaq and US30 on this strategy. Okay, this strategy is only for Nas100 and US30. Right, and remember, Nas100 and USD, they are very volatile. The spread is too huge, the spread is too high. Never take chances when it comes to this. Yes, you can predict the market on currencies because yes, they can give you hope, right? But when it comes to Nasdaq and US30, 1 minute you blow your account, 15 minutes you blow your account, 30 minutes you blow your account. Okay, now to avoid this conflict of hating the market, hating entries, wait. If the market is still here at 4 o'clock, wait for another hour close. Now, 1 hour time frame. If the candle closes below the support, fully close like this, below the support level, this is the support, right? If it closes below the support level, then we can do what? We can have our entry. Reason is because if 1 hour candle close below our support level, automatically the support level gets broken. And then if the support level gets broken, it automatically changes into our new resistance level. That is why we sell here. Reason we sell is because now we no longer have a support level, but now we have a resistance level. Okay, that is why we sell below. Remember, below, price action says we sell below resistance and then we buy above support level. Now we are below the resistance level. We do what? We are selling. We have a breakout below that support level. Now we are selling. Right. Now, let me make another example. Same but different direction. You still have your two levels. Okay? Still have your two levels. And then, this is the market. Remember, this is the resistance. This is the support. Now, at 5 o'clock or at 4 o'clock or at 5 o'clock, you find out that there's a candle that closed above. It closed above your resistance level. 1 hour. 1 hour later, you have a candle that fully closed above your resistance level. What are you going to do as a trader? You are going to take a buy there. Why? Because if 1 hour candle breaks above the resistance level, automatically the resistance level gets broken. We no longer have a resistance level, but now we have an active support level there. That is why we buy above the support level. Remember, the market says, or price action says, when the market is at the resistance level, right, we sell, okay? And then when the market is at the support level, we do what? We buy. We buy low, we sell high. We buy low, we sell high. We buy low, we sell high. We buy. Same tactics or same scenario or same basics of price action still applies to this, right? The reason why we buy above the resistance level is because the resistance level is no longer acting as a resistance level, but now we have a new level, which is the support level. That is why we buy from there. Now, another question I get from my students is that, but now how do we enter too many trades at the same time, Mr. Tapel? Okay, now this is what we do. There is what we call scaling in. Scaling in the market. Scaling in. Scaling in, okay? This is what's gonna happen, right? Now, let's say you have a breakout. Okay, let me remove this. Let's say you have a breakout, 1 hour candle closed above, then we take a buy, okay? Now, how are you going to enter other trades? So for you to be safe, right, is that you are going to hold this trade, okay? And then at some point, there will be a pullback, all right? And then the market goes like this. Then you have a what? Pullback goes like this. Still, same thing still applies on this scenario. Buy low, buy low, buy low. Reason is, the only time, okay, you will have another entry, or maybe let's say you've entered 3 entries here, or 3 positions, or you open 3 trades, okay? The only time you can enter other trades for you and your account to be safe is when now this first trade that you took, the stop loss is on profit, secured, right? and then the market goes on your direction, and then it creates a pullback again, and then here you can have another what? A buy entry. Okay, and then for you to have other entries, you will wait here for your market to do what? To give you a pullback. Then you can enter that trade again if your stop loss is in place, if your stop loss is in position, right? Then you can have other three positions. Reason why I'm showing you is because traders are always confused. They're always asking me, the students most of the time, but we always see the screenshots, right, in social media or whatever. We always see your trades, right? You open too many positions in one trade or in one signal. How do we do it? How do you do it to show that you are safe, right? It's not that we enter right here, we enter 9 positions. As you can see, we have like 9 positions here, right, opened. It's not here always the case that we're gonna open automatically those 9 positions. Reason is because what if the market goes on an opposite direction, then you blow your account. So for you to be safe is you can scale in the market, buy low, because the market is going on a what? On a bullish trend. The market is going on a bullish trend. So once the market goes on your lowest level, or once the market gives you a pullback or a retracement, you buy low, you buy low, you buy low, you buy low. Buying low simply means the previous position, the stop loss is protected. Then the previous position, the stop loss is the stop loss is protected. Then the market will keep on. If the bullish movements are still strong, the buyers are still strong. Once we know, and one thing we know about Nasdaq is that once it buys, it buys. Once it sells, and US30, right? So there won't be any problem of this thing continuing in this formation or in this direction up until probably you hit your take profit. Okay, so don't mind doing this once your previous trades are protected by the stop loss. Okay, how to win a 100% trade on Nasdaq is this. Using our breakout strategy. Once this breaks above, right, you have your buy entry there. How are you going to win is that after you reach a certain pips, you move your stop loss to profit, right? Remember previously, if you enter from this level, your stop loss will be at this support level. Okay, your stop loss will be at this support level if you have your buy entry there. But now, if now you're on profit, you're on deep profit, maybe 50 pips, 60 pips, what you do is you can move your stop loss above your entry level just to protect your trade, so that even if the market goes on an opposite direction, it will hit your stop loss, but it will hit your stop loss on profit, which is a what? Which is a win-win situation in this case. Even if the market moves in an opposite direction, it moves on an opposite direction, but on profit. You are still making money at the end of the day. You are still making pips at the end of the day. Okay? Although as traders, we don't want our trades to hit the stop loss, but for us to be protected. Remember, the main thing about growing an account is to always be what? Is to always be protected. Always protect your profits. Okay? And then the other thing about winning is that you must have what we call a daily target. I said this before. A daily target. Traders, don't be greedy. This is how you won't be greedy, right? Once you reach your $50 target, close that position. Close your positions. Why? You have reached your daily target. Now, if you see that the market is still going on a buy, very nice buys, and you assume that it's going to continue going on a buy, and then you don't close that position or you don't close those positions, and then the market goes on an opposite direction, you start losing money. It's because you were greedy. That's where greediness comes in. If now you reach your target and you don't close your trades, you are greedy. You want more that is not expected from you. Right? So have peace. Every time when you open a trade, always have a target before it even hits your take profit. Okay? That is why most of the time we have what you call a take profit. If the market hasn't reached your take profit, don't close your trades unless you have a daily target. So there's two types of closing positions. It's a daily target and a take profit. Okay. Now we are talking about what we call a take profit. We have a daily target and then we have a take profit. Now, here's the thing. Here's the catch. Right? Most of the time, your daily target will be lesser than the take profit. Right? So let's say your daily target is $50. All right? Your take profit most of the time will be around $100. Right? So you will have about 2 trades that are running. The other trades, you can take it from $50 and then the other trade, you can let it run up until it hits 100%. Or up until it hits your what? Your take profit. Okay? So let's always try to practice this. 1 hour. Always wait for 1 hour to break above your resistance level. Then you can buy. Wait for 1 hour to break below your support level. Then you can sell. Okay? And then for mentorship is still available. One-on-one sessions are still available. And also signals are still available on the group. If you find out that, okay, fine, you are still struggling to understand the scenario of the breakout strategy, yes, we still have our groups in place. We still have the community in place that is operating. Okay? Now remember, always be consistent when it comes to this. Always wait for what? For New York session. New York session, for us, our trades, we take it around 5 o'clock, 6 o'clock there. After 15:30, because I'm in South Africa right now. 15:30. And on New York, probably sometimes we have news at 10:30. Sometimes they have news at 9:30. On South Africa, we have news at 3:30. Sometimes we have news at 4:30. Right? So always be in position of what time will the fundamentals take place. And the most important thing again before I close is always trade this on Nasdaq and US30. Nasdaq, US30, and then we have US500. Same movement, same pairs. Right? Most of the time they have the same directions. Okay? Now always make sure that you look for this on Nasdaq, US30 and US500. Hope this video is very clear, and then congratulations on watching this video. We hope that you will be consistent going forward from now.